Manhattan's Q3 2025 results are in, and again, Manhattan's market moved with purpose.
Exactly. Over 3,000 closings, steady pricing, and fewer homes on the market.
It's another quarter that proves when fundamentals align, New York's market does not slow down. Welcome back to the podcast. Which podcast do you say?
Real Talk NYC Real Estate with John and Jonathan.
Very
with
good.
John and...
Yeah, there you go, Jonathan.
All right.
Today we're unpacking the Q3 2025 stats.
Tell the audience how you are
I am doing all right, and happy birthday, you old man.
Thank you.
So we happen to be shooting this on your birthday. I appreciate you didn't take the day off this year. That's really nice. That's good.
Hey, I'm always working
We should
on my
start that
birthday.
trend, taking our birthdays
I
off.
love
Wouldn't that be nice?
Sure. Yeah. Okay. See you later. Enjoy the podcast.
Yeah, we'll work on that.
All right. So what are we going to talk about today?
So as I said, we're going to talk about Q3 2025 stats are in. We are just a week into October. And interesting numbers, a continuation of what we talked about last month, basically, because we shot late the Q2 podcast a little bit late. Right. But as we were feeling last month, continued stability in the market, and all good things pointing to Q4 lining up to be hopefully another strong quarter for us.
Right. And so when we look at these stats for the audience's benefit, we're really talking about the closed sales are really what's going on in the late spring to early summer.
Right.
Because there's a 90-day lag time for the Q3
Must
numbers.
remember, yes.
Right? So between the signed deals and then the closed deals.
Yep. And we're seeing still that continued strength, as I said, more sales, faster absorption rate came down a little bit, which means more deals being done than new listings coming on the market. Mm-hmm. But which just all indicates confidence in our market. Yep. So as always, we break this down into a few different categories. First and foremost, let's talk about interest rates. Mm-hmm. So the Fed made a cut in September. So that translated to mortgage interest rates at the tail end of the quarter. But for the most part, bounced between 6.4%, 6.8% for the majority of the quarter.
Right. So the rates have stayed basically consistent, and buyers, based on the numbers that we're seeing, buyers are much more used to these numbers in the mid sixes, and they're not anticipating the markets, the rates dropping into the fives anytime soon.
Yeah, and as I mentioned in the intro, we have that just all leads to stability. And that more than anything, because what we saw in that early 22, the rates doubling so quickly, then, people feeling really uncertain about where they were going, then it started to stabilize. Now we have actually coming down, the Fed cutting rates after being stable for a really long time. So that all just adding more confidence to our market.
Right. So would you say it's smooth sailing right now?
Oh, sure. Yeah.
It's not wonky?
Yeah,
I use that word wonky. Like
it's
Wonka.
It's a technical term.
Okay, so let's talk about closed sales.
That leads to closed sales. We were up this quarter in closed sales, 3158 in total. That's up 4% from Q2 and 13% higher than Q3 of last year. So, again, strength in the market, seeing transactions actually coming together, buyers and sellers' eyes coming together, and deals getting done.
And we look at the trend, so it's higher quarterly total in more than 2 years. So that's very important, about 4% above the Manhattan 10-year average.
Yeah.
So that tells us that the market is healthy, as we talked about already, and that
Sustained
people are
momentum
in this marketplace and they're buying the real estate, which we'll talk about in a second.
Yeah.
In Manhattan, we're in this kind of not a very unique little marketplace that we have here. It's not a little marketplace, a big marketplace. But we had 65% of our deals were cash transactions for the quarter.
Yeah.
And what's staggering in my
Which
mind,
is above average. Usually we balance
50,
around
50.
50 to 52% or
right,
whatever.
But the amount of cash in the $3 million deals and higher was about 90% cash deals. So
Yeah, and that shows real strength at that upper end of our market, which is always a driving factor. Because $3 million, of course, it's a lot of money, no matter which way you slice
and I
it.
would like to, I'd like to put my hat in the ring to be one of those buyers.
You're just gonna.
I would like to win the lottery and be one of those buyers, and then also I'd like to work with the buyers in that category. Inventory. Let's talk about inventory. So, inventory numbers: 7,733 listings on the market, down 6.8% between the second quarter, slightly higher, about 7% higher than last year. But what is it telling us about the inventory numbers?
Yeah, so inventory is higher, but than last year, but falling quarter over quarter, which means, and again mentioned it, the absorption is outpacing new listings.
Correct.
So the number of contracts getting signed, or the number of deals actually closing, this is based on sold and closed, is outpacing the number of new listings that are coming on the market.
Right. So, in other words, it's basically a healthy market. The dynamic is it's moving smoothly. So
Yeah, I think what we're seeing is that we're
buyers
seeing
are
that with that confidence returning,
absorbing the inventory.
some of those stale listings that have been out there are also being absorbed, are also being transacted on. So, which is good to clean out that old inventory. I know we've gotten rid of some older inventory. That's a nice thing to get rid of.
Yeah. And I think some sellers we're still seeing a bit of a disconnect where some sellers wanting to hold on for the market to catch up to their pricing. But more often than not, I think more sellers are going to the market and they're pricing their homes accordingly.
Yeah, drilling down on the absorption rate piece. So the months of supply at the current transaction, how long it would take to absorb all the inventory, dropped again to it dropped last quarter, dropped again this quarter to 7.3 months. It was 8.2 last month and 7.8 last year at the end of Q3.
So it's moving faster. The absorption rate is actually lower than the 10-year average.
Yeah. Yeah,
Which
typically
is
we have a
good.
balance 8 to 9 months. So we're, almost a month below that.
Yeah.
That's, again, it's still healthy. There's always a range. There's always a margin of error, so to speak, or a space there where it's still a healthy market. If we were at 4 months, then it would be a different story. But we'll see what happens this fall. We started the fall a little bit earlier, so because it was September 1st. So we saw a bulk of inventory come on in September, but we also, September's always a tricky month because you have a lot of holidays, a lot of Jewish holidays and stuff that push things out. I know us in particular, it seems like every listing we were bringing on the market this fall required a lot of work to get it actually listed. Staging, painting, handyman work to clean up little things.
Yes. Where there's a lag time there in terms of getting it prepped to
and
go
I know
to,
from
go
the
to market.
buyers that I'm working with, the searches that I have, it was a bit lackluster in terms of new inventory hitting the market in certainly in September.
Right. So one thing, before we wrap up the absorption, I just want to make it known that the days on the market have also decreased. So we have 77 days on the market, down from 87 days on the market, which is the fastest pace that we've seen since 2022. So again, it goes back to, for the audience, it goes back to the fact that the apartments are moving, the inventory is moving, and it's moving at a faster pace than homes are coming on the market, which is, I think it's a healthy place to be.
Yeah, and
if you're a seller.
And for
the buyers, too.
All the stats that we look at is pointing in the right direction in terms of a healthy market. Another one to look at that we always talk about is negotiability. So how much the last asking price to that sold and closed price, and that average listing discount came in at like 6.2%. So up just a little bit from last at 5.8%, but again in the same range. So there's stability there, which is that buyer and seller seeing eye to eye to get a transaction done.
Right, so it's basically flat from last year.
Yeah, I took your talking point. Yeah,
you totally took my talking point, but I don't care because it's.
That's all right. I told you there's a lot of back and forth here.
Hey, look, I'm an equal opportunity employer.
Tomato.
All right, so buyers coming in, they're negotiating, sellers pricing is stable. it's everything's kind of normal for once.
Yeah,
in
slight
our
difference
market.
between co-ops and condos, but again, a negligible difference, maybe a 1% difference in negotiability.
These sellers are not grossly, at least the sellers coming into the marketplace, are not grossly overpricing their homes ambitiously, thinking that rates will come down, or some people, some sellers just simply want what they want.
Yeah. Well, I have to say, overall, my takeaway from this quarter is a very positive one. Obviously, when any stabilization in the market is a good thing for us as real estate agents, of course, but also for the buyers and sellers. It gives them confidence to walk into the market, not feel like they're really rolling the dice on the market for value from a value perspective. We have, even with the instability that's seems to be across our world right now, with the wars going on and international politics and such feeling very tenuous at best. It is nice to know, as long as we've both been in this business, we always talk about the strength of the New York City market, but it always helps to see a reaffirmation of that.
Sure.
And that's what this quarter feels like. And who would have thought, given the change in the political instability that we feel and such. And of course, this could all change next quarter. There's always a chance when you deal with the bigger issues in our world, in our country, something could happen that throws all of this off. But who would have thought we would have as stabilizing of a force as we've seen this year? It just goes back to the old thing that we always say, which is New York is a destination.
Correct.
There's only one New York City,
Yeah.
and people want to live here.
Sure.
And, we always say last to fall, first to recover sort of a marketplace. And this year has certainly proven that yet again.
Definitely. And I think everything that you've said, we look at those at the last quarter numbers and we say, yeah, it's a healthy market. Buyers, the numbers tell us that the buyers have become much more normalized in terms of the interest rates being where they are. And they're finding we had over 8,000 units on the market last quarter. So there was plenty of choice for the buyers in the marketplace. And now the buyers are really, they're moving. They're jumping into the market.
Yeah.
People, as you say, it's Manhattan. They're coming into the city every day. They're leaving. They're being transferred out. People are dying. They're divorcing. They're having children. They've got to move. And the good apartments will always sell. The challenging apartments on the market in the quarter, and it's been this way since COVID, are the apartments which need renovation. And unless the apartment is priced at a significant enough discount, the apartments will languish on the marketplace.
Yeah.
I personally think that to find a really good deal, if you have the stomach to renovate, you can find some seriously great deals in this marketplace.
Yeah.
And then on the flip side, the homes that are renovated impeccably and beautifully in very nice areas, good buildings, they're seeing immediate attention once they list.
Yeah.
It's homes that are in pocketed neighborhoods that it can be quiet in this market. But again, everything is going to be price sensitive, I think, in those particular areas.
Yeah.
And
I think part of the movement that we've seen and the stabilization has come from, and we've experienced this in our business, is, there was always talk with sellers all the time about staging and the importance of staging,
Very
right?
important, yeah.
And that goes back 10, 15 years when staging became more. It started with virtual staging, and now it's really leaned into physically staging an apartment to make it look as good as possible when somebody walks through the door.
Yeah.
And I do feel, see if you agree, but I feel like that resistance has continued to wane on doing those sorts of things. Like bringing in somebody to do small fixes, refinishing countertops and stone,
Floors.
cleaning up floors, and then the actual staging of furniture, etc. there feels to be less reluctance to doing so. People have accepted that, you know what, if I'm going to sell my place, I need to put some if necessary, if I'm guided to, I need to put some time, some money into it to make it show as good as possible. And that's most important in those apartments that need a tremendous amount of work.
Absolutely, 100% correct.
And I think that's helped all the stats move in the right direction here.
I agree. And so I agree with you. Sellers are much more receptive to doing what it takes to get the home prepared, and they're prepared to spend money to get their home sold.
Yeah, and while, of course, it's in our best interest because it helps things sell,
Sure.
the number one thing that kills value, we've talked about this many times, is the number of days on market. So the longer that apartment sits on the market,
Right.
the less money the seller is going to make. Better to take some of that money, put it into the apartment, it sells much quicker. You actually end up in a net positive there.
Absolutely.
Versus waiting. Because what's going to happen, and we've seen it on some listings, wait. Okay, we'll try to work with what we have, and then they have to invest the money. Now they've killed days on market, and they're making the investment that they should have made, 3 months ago, 6 months ago, whatever. And that is, it's a double-edged sword there. But in order for it to help it get sold, you got to take the guidance of a good real estate agent and make those smart investments. And we're not talking about a tremendous amount of money. When we're talking about multi-million-dollar properties, you spend $10,000, $20,000, that can do a world of things in an apartment.
It could be the difference between the apartment languishing on the market,
Yes,
and then the apartment selling in a reasonable amount of time.
in a week.
So.
Yeah.
So I think that the moral of the story is that people should definitely call us because we're very good at doing all of that. I think so.
You're
I'm
adding a
very
call
good.
to action there. That's great.
I'm
Yes.
very good at it. All right. So listen, everybody, thank you so much for tuning in to Real Talk.
As always.
Real Talk NYC
It was
Real
a
Estate
real
with
pleasure,
John and Jonathan. It
And
was
a big happy
thank
birthday
you,
to you.
thank you.
We're not going to talk about how you're 61. But
I loved it. We'll tune in next quarter.
Yep.
And
January.
John Boy, always great. Be healthy, safe, and most of all,
Remain in gratitude. We'll talk to you next time.
see you next time.